Zoom video communications. And it's interesting, right? I want to say this off the bat. I think this is something that we generally try to talk about with a lot of episodes of The Rank. Sometimes we rank businesses that the lowest ranked one, we think is a dog. We think it's junk. We think you shouldn't own it. I think in this case, again, we're talking about stocks that Matt owns, I own, or maybe both of us own, right? So I think it's important to remember, I think this is one of those shows that our rankings are probably more about our conviction and not whether we think it's a bad business or a good business. Because yeah, I rank this as my fifth stock of the sixth. And I own a lot, and I think it's a wonderful business and it's well run. So what's the story? What's the story with Zoom Video Communications? So as you said, I mean, I think this is definitely like the epitome of the stay at home, work from home stock from 2020, right? I mean, in a nutshell, that's Zoom. So its core business, of course, is providing telecommunication service, video conferencing, largely to businesses, but also people use it for personal use. And if you look at the growth rates, I don't have it right in front of me, but I think the revenue that it reported, its growth rate for its first quarter was up like 190% revenue growth. So that was revenue in calendar 2021 that it reported. The company is set to report in about a week. It's going to report its second quarter. So I think there is a tremendous amount of interest to see how the company's business has performed. If you start looking at certain segments, the way there are certain cohorts of customers, the number of customers that spend more than $100,000 per year doubled in that first quarter. So it's a business that, even though we say it's the epitome of the stay-at-home stock, the work-from-home stock, it has continued to grow at a very, very high rate. And then you think about the economics of the business, incredible cash generation, right? Its cash margins are, I think they're somewhere along the lines of 50%. It's absolutely immense, the amount of cash that this business generates from its operations. So what's the story with the stock? A couple things, because the high price was actually reached back in 2020, last fall. And it peaked a little bit again earlier this year, and then it fell again since reaching its 2021 peak. And it's really kind of that pivot, right? There's the expectations that the growth is only going to play out for so long. And what's going to happen when we go more and more to normal ways of business? We don't know the answer to that yet, right? Matt, for every company that said they were going to have their workers back in the office this fall, there's 20 companies in that same industry that have said, yeah, we're going to hold off for a few more months. So I think it's really interesting to watch it play out.
Yeah, I've seen more headlines of companies delaying their return to the office than I have of returning to the office lately. Yeah. I rank Zoom 6. It's a great business. It's the one that I would be least excited in putting new money into now, which is, I think, why I got my number 6. Yeah. I tend to be the reopening guy at the Fool. I'm an eternal optimist when it comes to everyone wants to be out and about and getting together and things like that. I just went to my first concert in a year and a half this weekend. It was fantastic. Everyone was so happy to be there. So I tend to have more optimism when it comes to reopening than most. But having said that, a lot of our favorite stay-at-home stocks didn't peak till early this year. Mm-hmm. Zoom peaked in last fall, as Jason said, and it's right for a reason. That was before the vaccine news started coming out. That was when we didn't know if anyone was ever going to get back to the office.
Right.
If you remember, Pfizer's first phase 3 data started coming out in mid-November. I think it was November 14th around. And that's really what kind of made investors kind of think twice. Then when the vaccine started being widely available in March, that was kind of the second leg down. I don't think it's a bad business to own long-term. I think over the next few quarters and next year or two, it's going to get hit harder by the reopening than most people think it will.
Yeah. So here's the chart, right? This just kind of shows what we were talking about, that peak in the fall, like I said, about the time the vaccines started to get scaled up and rolled out. And then again, peaked in early February this year. A lot of our favorite tech growth stocks peaked over that same period. I just want to throw these numbers to overlay that, though, just to see, right? You look at revenue growth has continued to be very, very strong over that period. The question for me, and this is, I'm in that same boat with you as terms of the 6. This is the one that it's almost at the bottom of my ranking in terms of least interested in putting new money in right now. And I think what it is what is the market going to determine this business is worth, right? Once the growth rate does slow. And then what does management do with all of those massive excess cash flows to diversify the business, right? Because we talk about optionality with a business with a lot of cash flows. Is it going to start buying back shares? I mean, what does its future look like, right, beyond this hyper growth phase? And that's why I ranked it, because it's just hard for me to predict what that looks like. I'm not selling. I love the business, and I intend to own it for a long time.